Good morning, everybody. It is the 20th of September 2025, and in today's video, I'm going to be covering the aspects of doubling. So, this video is a video that's been long awaited since you guys have seen me mention it quite a few times. I've explained it already, but I want to put it in video format for anybody who may still be confused regarding the actual concepts of doubling, which is why I'm here. I'm going to be covering only two aspects of doubling because doubling is not like the other QT concepts that exist out there. So we shall get started and I shall unravel more. So some foundational information that needs to be known before watching this video. First of all, sequential SMT, right? If you don't know what sequential SMT is, go way to the beginning of the WAP, start watching what sequential SMT is because you are missing out. If you don't watch what sequential SMT is, you're not going to understand what doubling is at all, right? How to incorporate them. By them, I mean sequential SMT, how to incorporate sequential SMT within your trading. If you don't understand how to incorporate it within your trading, you're going to be lost again. You need to understand how to incorporate sequential SMT to get a good base understanding of doubling, okay? Which ones to look for, because not every sequential SMT is going to be high probability, right? Structure, narrative, all need to be taken into account when looking for sequential SMT. And it's a key aspect of doubling. And finally, DFR, right? Which is going to be the last aspect I'm going to be covering. So let's go to the second slide, right? Understanding before utilizing. What is doubling, right? Foundation. Doubling is a concept that Day mentions within his 2024 mentorship that explains cracks and correlations, right? It's basically a way to go ahead and elaborate more on cracking correlations and how exactly to utilize them, right? So we're not always going to get an SMT that is between Q1 and Q2, right? A sequential SMT, we might get one that's between Q1 and Q3, and there's a process you have to follow to go ahead and validate the usage of that type of SMT, and I'm going to be covering that in this video. And so, unlike his other concepts, there are multiple aspects / definitions of doubling. In today's video, I'll be only covering two that I implement within my trading on a day-to-day basis. Simply because I'm not covering the other aspects of doubling does not mean that they do not work. It means that I do not implement them within my trading, so I'll not be explaining them. Guys, if I don't implement it within my trading, I don't expect you guys to do it either. Some of you guys might do it subconsciously without even knowing that it's called doubling. But again, I'm not going to be covering those aspects of doubling since I don't personally utilize them. I don't teach what I don't do, really. The main purpose of doubling is to create cracks and correlations, initiating the manipulation / distribution to later be mitigated. Doubling engineers liquidity while simultaneously mitigating it. This is the hardest part to grasp regarding doubling, right? That doubling engineers liquidity while simultaneously mitigating it. For some of you guys may think, Halo, you're smoking a crack pipe, dude. What the fuck you mean engineers liquidity while taking it out at the same time? You guys are going to see shortly what do I mean by that, right? The meaning behind engineering liquidity while simultaneously mitigating it is you have for example, an old high or an old low. Let's do an old high as an example. An old high gets mitigated in Q3, right? And the DFR high, whatever. And then we take it out and we drop. Two things are happening with that old high. If it's actually doubling, or since it should be doubling, it's going to send us to a drop back down to then hit a POI, a bullish POI, or a draw on liquidity, whether it be a true open, NWOG, NDOG, whatever it may be. And then what's going to happen is that it's going to go ahead and pump right back up to then mitigate those highs that create a doubling. Remember carefully that doubling, the move for doubling, is simply just to take out liquidity, taking out your external, giving you your first move up, your manipulation perhaps, and then later selling back down and then taking out that sell side that was created by the actual, doubling SMT, right? Now, the two aspects I'm going to be covering are the back-to-back sequential SMT and the DFR doubling. From those who do not know, there's other aspects of doubling, such as if you have sequential SMT with the triads and also with intermarket sequential SMT, that's doubling, right? Doubling is one of the only concepts that Day has that it doesn't have a cookie cutter definition. There are multiple aspects of doubling. And since every aspect hasn't been covered in full detail, people start to, discombobulate the meaning of it, and then they just throw the word doubling around like it's nothing. So, doubling back to back, right? The first aspect of doubling that I'll be covering is back to back sequential SMT. So, Q1, Q2, sequential SMT, and then Q2, Q3, hence the meaning back to back sequential SMT. This is when price forms sequential SMT again right after forming a sequential SMT within the cycle before. So what do I mean by that? If you have microcycle sequential SMT and Q1 opens, right? We engineer liquidity, Q2 mitigates Q1's low, and then Q3 mitigates Q2's low, right? That can be considered an aspect of doubling, right? This occurs a lot when price has yet to achieve its target structurally. Now, I didn't put this within the slide, but it also happens a lot when price has yet to go ahead and obtain its target in time-wise. Meaning, yes, we are where we want to be in terms of structure. We've already hit our structure POI, whether it be true open, NWOG, sell side, whatever it may be. But the time is not right to go ahead and deliver. Hence, us creating one more sequential SMT, mitigating the low one more time, and then delivering us right back to buy side, right? Or sell side, depending on if it's a bullish or bearish example. Remember that sequential SMT does not make price bearish/bullish, which is why a lot of the times we form back-to-back sequential SMT or doubling sequential SMT. If price is structurally bullish and there's sequential SMT that's bearish, the structure needs to align. There needs to be other POIs, either true open, NWOG, NDOG, sell side, buy side, fair value gap, SMTF, whatever it may be, a PSP. There needs to be other confluences to support that bearish narrative if there's bullish structure in play. That bearish Kraken correlation does not make bearish structure. It makes simply a bearish Kraken correlation be instilled into the marketplace. Structure needs to support that bearish Kraken correlation, right? Without structure supporting that bearish Kraken correlation, price will keep on running and running and running and running and running and leave you in the dust, okay? If it doesn't align up structurally, price will not displace until the alignment is there. And I'm saying this because I'm going to show you an example. If it does not line up structurally with amongst a POI, sell side, buy side, fair value gap, NWOG, NDOG, true opens, whatever it may be, PSPs, if price has yet to achieve its target, it's not going to displace to your other buy side target, right? So if it hasn't reached its intermediate sell side or the sell curve target, it's not going to initiate the buy program. So you need to go ahead and know that, one, have your POIs instilled in the market, right? I personally use NWOG, NDOGs, and true opens a lot for POIs and fractals, as you guys may know. And I'm also going to be covering on how doubling can be incorporated with fractals, but that's later in the video. So yeah, when you have those sequential SMTs, if structure is not aligning with price, you're not going to get a good trade. It's not going to displace. So you have to wait for structure to go ahead and validate that push upwards, right? Or that sequential SMT in general. An example of this, as I already mentioned, back-to-back microcycle sequential SMT, Q1, Q2, Q2, Q3, okay? Be aware if price starts to form sequential SMT more than 2 times. If price forms sequential SMT, Q1, Q2, Q2, Q3, Q3, Q4, more than 2 times, obviously, right? More than doubling, then price is engineering lick for later usage. So this is something that a lot of people may not know. But for example, if you have 3 stages of 90-minute back-to-back, Q1, Q2, Q2, Q3, Q3, Q4, right? You have 3 stages of 90-minute back-to-back. The likelihood of that 90-minute holding actually diminishes. It doesn't mean, oh, there's more stacked sequential, it's going to work more. That's not at all what it is, actually. It's actually bullshit, to be quite frank with you. Every single time 90-minute forms or sequential forms more than twice, the likelihood of that sequential working is unlikely. Why is that? Well, 2 things can happen. If we're forming sequential SMT and we're not displacing, it means price, again, has not hit its target structurally. So if we keep on forming sequential, and we don't displace, what's going to happen? Price is engineering LR, in which price will then obtain the highs, eradicating the LR, and the sequential SMTs before distributing to its target. This happened this past week. If you guys want to go ahead and look at it, it happened, I'm pretty sure, the day of FOMC, I'm pretty sure. Yeah, FOMC. So you guys can go ahead and take a look at your charts and and review that. I think it was, Wednesday. So doubling back to back, right? So here we have microcycle sequential SMT at the lows, as you guys can see. Microcycle sequential SMT, Q1, Q2, Q2, Q3. Now, something to note. Price, yes, it structurally, it hit its target. NQ has already mitigated where it wanted to, primarily not NQ, but ES did. ES mitigated true day open, printing the low, this low down here, right? Then displacing back up. Now, notice how we kind of consolidate in this area of true micro session open, right? This right here, this consolidation is not viable. If I was looking for longs, I wouldn't trust this consolidation. I wouldn't be looking to enter off of this up close candle. So what do? You wait. Wait for what? 945. Why do you wait for 945? 945 is a new microcycle opening, and it's also a new 15-minute candle opening. For those of you guys who trade fractals, you guys know exactly what the fuck I'm talking about, right? So for example, microcycle sequential SMT at the highs, Q1, Q2, I didn't have it marked out here. We formed a bearish 15-minute fractal at the lows. Why is it a bearish 15-minute fractal? We formed microcycle at the lows, right? We ended up mitigating microcycle at the lows after we ended up mitigating the Q1's low in Q2 after 9:30 open. Since we mitigated after 9:30 open, we'll be utilizing the 15-minute candle. So the bullish, if we were going to use a bullish fractal, right, it will need to be an up close candle or a PSP or PRC, in which it wasn't. So this bearish 15-minute candle is a bearish fractal. Why? Because there's microcycle sequential SMT at the highs validating the usage of that fractal, right? Now, listen carefully here. Bearish fractal. How do you confirm a bearish fractal? By sealing the range. How do you seal the range? Wait for the 15-minute candle closure, right, of 9:30, and then wait for 9:45 to mitigate the low. In which, what will happen if we mitigate the low? In many cases, if we mitigate the low, we'll create back-to-back sequential SMT. Your doubling aspect, your back-to-back sequential SMT, Q1, Q2, Q2, Q3, giving you a second stage distribution in which price has then, at that moment, obtained its target structurally, and time-wise, it makes sense to then obtain its buy-side target all-time highs, right? Now, again, as I mentioned before, doubling will engineer liquidity while simultaneously taking out. So, microcycle sequential SMT Q1, Q2, we take out the sell-side curve on ES, and we don't take it out on NQ, and YM takes it out as well. And then what happens? In Q3 opens and we take out Q2's low on YM and we fail to do it on NQ, right? Giving us your first displacement, right? Coming back down, creating a microcycle sequential SMT at the lows, right? Validating the usage of this 15-minute fractal. But again, the narrative does not align with this 15-minute fractal. So we're going to expect it to get disrespected to then obtain its all-time highs target. In us creating that microcycle sequential SMT Q2, Q3, we are engineering liquidity on NQ for later usage. What happens? All-time highs gets mitigated, we drop, and we take out the low. Very simple. So again, it takes out sell side, it takes out liquidity while simultaneously creating it. So it takes it out, creates a POI that can be referenced within the same day, week, month, whatever it may be, and then it will take it out later on after it hits its target. So in this case, the target was all-time highs. That was my draw on liquidity for yesterday. Right, I wanted to see all-time highs get targeted on top of the true day open fractal. All-time highs gets mitigated. I end up getting stopped out break even on the short, and then I long back up off of true day open, right? So that explains this aspect of doubling, the back-to-back, right? And here's a little bit more detail, right? Price creates microcycle sequential SMT, Q1, Q2. First sequential SMT to support the already instilled bullish institutional order flow. Price then displaces but struggles to displace past true session open until sequential SMT is formed again, doubling sequential SMT, validating the usage of, or validating the distribution upwards and invalidating that true microsession open, right? So when looking for sequential SMTs, check and see if you are above and below any true opens. Check as well if one asset is above and if the others are not. This is very important. If you go ahead and you look at Dave's mentorship, he mentions a lot about true open divergences. I personally use them a lot within my trading. I think you guys as well should use them. And they're very, very good if you want to incorporate doubling, especially doubling back to back, because it can give you an area of support to then see price not return to a low or a high and then displace to its intended target, whether it be buy side or sell side. So I definitely advise looking at sequential SMTs that are occurring under true opens. Very, very important. Now, doubling DFR. This is one that's a little bit less common, but when it does happen, it works pretty well. Of course, structure and narrative is very, very important with all these concepts. So if they are not instilled in the marketplace, then guess what? If the structure doesn't align, then don't take it, right? The next aspect of doubling that exists is within DFR. So listen carefully. It's a lot of moving parts in this, so I don't want you guys to get confused. If DFR is the high of Q1, I say the high in this case. If it's the high of Q1 and we mitigate it on 1/3 or 2/3 of the assets, meaning we mitigate it on 1 or 2 of the assets, right? But one of them is remaining to not mitigate it. One asset does not mitigate the DFR, right? In Q3, then this can be considered doubling. The logic behind this is supported by the logic of DFRs being high probability POIs and cutting the quarters into halves instead of 4 quarters, right? Hence the reason doubling. Example, DFR for daily cycle is the high of Q1, right? It has to be, listen carefully. If the DFR is not the high of Q1, it's not going to work. It needs to be the high or the low of Q1. If it's not, forget about it, okay? And the logic comes by, Asia high, Asia low. And I'm going to explain that, right? If you guys look at ICT's core content video, she explains the usage of Asia liquidity and how Asia's POIs can be referenced in New York to then host distributions, right? This is the logic behind that if you're using it, of course, with the daily cycle DFR, right? DFR for daily cycle is the high of Q1, NQ mitigates Q1 daily cycle high. In New York, whilst ES and YM fail to do so, once Asia high, Q1 high, DFR high, is mitigated, you can look for shorts back down to your POI/target. And then once that POI/target's mitigated, you can look for longs back up to then mitigate that doubling that we created, right? This aspect of doubling is a little less common than other ones, but works just as efficiently as the other ones, right? So again, the likelihood of this playing out or of this presenting, it's a little bit slimmer than the other ones, right? The back-to-back is a little bit more, the back-to-back doubling is a little bit more common. The sequential between Q1, Q2, and Q2 and Q3. But the doubling with DFRs is, it doesn't happen every single day, right? Especially with the daily cycle, right? It can happen with the weekly cycle. It happens quite frequently with the weekly cycle, actually, in which we mitigate Q1's low or high, with the DFR being the lower high of Q1 on Wednesday and then distributing, right? Doubling DFR. So here it is. Here's an example of it, right? So NQ, yes, NQ mitigates Q1's low in Q2. Okay, it mitigates Q1's low in Q2. Now, what does YM do in this case though? YM mitigates Q1's low in Q3. ES does not mitigate Q1's low or Q2's low. So you actually have two aspects of doubling forming at the same time. You have doubling between Q1, Q2, where you guys can see DFR is the low of Q1 or the low of the daily cycle for Asia, right? We mitigate that, create sequential SMT, the normal, or just a normal sequential SMT here between Q1 and Q2. And then in Q3, we mitigate Q2's low on YM, and we also mitigate the DFR low, creating the DFR doubling as well. So in this image, I just realized this right now, actually, we formed both doublings, the doubling back-to-back sequential SMT and the doubling the DFR, right? And what did I say about doubling? It takes out liquidity and also mitigates it simultaneously, okay? So what do I mean by that? Let me show you a reference of here. This is a more example. This is an example of, or a deeper explanation of that. Price fails to take out the low of DFR on ES while YM mitigates it in Q3. Mitigation of the DFR validates the move up to then hit its intended target to then distribute all the way back down. Hence the logic, price engineering and taking out liquidity at the same time. And of course, if you're saying, Halo, but we just went straight up. Guess what? No, we didn't. This is the DFR doubling that we had here, right? Here's the low. Again, this DFR you guys see right here, I'm on the higher time frame, so scratch this DFR, please. 15-minute DFR at the lows down here. Notice how we create doubling. YM comes to its intended target. This wick right here. I'm pretty sure it overlapped with the true open as well. Or sorry, a new week opening gap or a new day opening gap. And then sold back down and took out sell side. Now, take a look at YM. Or sorry, NQ and ES. What do? NQ or ES comes up, takes out buy side, has true week open, mitigates the high, and does what? Drops and takes out the doubling lows. What does NQ do? Same shit. True week open, comes up, comes back down, accumulates, This is where we formed all that stacked daily cycle here. Came back down, dropped off aggressively, and then did what? Buy program back up to buy side. Taking out the doubling and then buy program back up to buy side. Right? So hopefully this explains all the aspects of doubling that you guys really need. There's a bunch I didn't cover because I don't implement it. Okay, guys? So if you guys want to implement them, look at the day videos. He explains them in really good detail. I personally do not like implementing any other aspects of doubling besides these two. I don't look at intermarket sequential SMT. I simply look at structure and the futures triad. So if you guys have any questions, feel free to go ahead and shoot me a message. I'll gladly help you guys. Stay safe. Much love. And I'll catch you guys later. Peace.